Two concerns I have as we go through this, and I'd like to ask Mr. Reuter if this is true. It's been my understanding that the participation in the market by individual investors has dramatically decreased since October. Is that true? And of course there may be other better bond prices or lower stock price. I don't know what. But first the question is, has the participation by individual investors greatly decreased?
Yes, sir, that's my understanding, that there has been a significant decrease in the individual investor participation in the market.
Have you got any reason for that? People were burned by October, or loss of confidence? What?
I think there's still a considerable loss of investor confidence with regard to the stability of the market, and I here refer primarily to the problems of possible excess volatility.
Does that concern you?
Absolutely.
The second question, and Mr. Greenspan answered this when we took it up before, when he was up here before, and that is we all have a concern, certainly I do, about the international competition, the foreign markets, whether if we tighten up too much, margin requirements, for example, that they'll just go abroad. Now, on the other hand, it seems to me, I believe you rather poo-pooed that, because the size of the markets abroad is so limited. But they're not dumbbells over there, and maybe I'm quoting you out of context. They're not dumbbells, and presumably those markets can increase dramatically. What do you say to that, Mr. Greenspan? Do you have concerns about that?
Yes, I do, Senator. I think that it's certainly the case that at the moment the size of the markets and their capability of handling spillover from U.S. exchanges is really quite limited. But it doesn't require very much to construct an exchange. It will evolve, as indeed we've seen various different types of market evolve as a result of regulation. We created the euro-dollar market, for example, in this country largely because we regulated the flows of international exchange. And one can scarcely argue that that is a small market these days. I think that it will take a while, it would take a while if we put burdensome regulations on which would move markets abroad. And remember that if the markets move abroad, they still affect us here. In other words, it's not the issue of taking a problem and exporting it. It still has the impact here in much the same manner. So we don't, in that sense, insulate ourselves as a consequence.
What about, Ms. Graham, on the commodities markets? Is there competition there, possibly abroad?
Absolutely. I would submit for the record what happened on October 20th. The exchanges put price limits, and as you know, the bond prices were increasing, and it met the limit, locked limit up. In other words, it hit the limit on the upside, and trading stopped in on the exchanges here, and Treasury bond futures volume in London and the London Stock Exchange increased. London International Futures Exchange increased 8-fold on that day. And
now, I suppose if these circuit breakers, that would be a factor that might drive the sales abroad, wouldn't it?
Any regulatory change, including circuit breakers, has to be cognizant of the fact that you impose a cost of doing business, and you must be sensitive to the fact that in imposing a cost of doing business, you could, over time, send that business overseas.
Well, those are concerns. I notice my time's up, but Mr. Chairman, I agree with you that it behooves us to follow this closely and not just forget the thing. And I appreciate the testimony from the three witnesses today, and certainly I intend to stay abreast of it. Thank you, Mr. Chairman.
Senator Graham.
Thank you, Mr. Chairman. Mr. Chairman, it seems to me that, and it may be that I'm looking at it and thinking that you people agree with me, and maybe you agree with other people, but As I listen to the discussion about circuit breakers, now that we have all become aware of all these mechanisms since October, as I listen to what is being said by people inside the industry or regulating it, you're not viewing circuit breakers as being some magic way of saying, well, if we wait till tomorrow, tomorrow's another day, and therefore maybe prices won't go down if we don't let them go down today. You're viewing circuit breakers as a mechanism that allows the market to disseminate a little more information, to put its liquidity in order, but not as a mechanism to stop the market. Is that right?
That's right.
To whom are you addressing?
Well, to
Everybody.
prevent
I'll
system
start.
overload is the problem, to prevent gridlocks from
So the
occurring.
problem you're really trying to deal with here is not that markets are going down. I mean, you're not trying to in the words of a view that is often spoken loudly around here, override the vagaries of the marketplace. You're just trying to assure that when market forces move, that they are not compounded by mechanisms within the system that create uncertainties about the ability of markets to clear, or concerns about liquidity, or other factors that tend to exacerbate natural market mechanisms and make them move further than they would. Is that right?
I think that's correct, Senator, and I think that, remember that the purpose of circuit breakers is to prevent markets from creating their own in an ad hoc basis. In the October crash, the demand for execution, both in the futures markets and in the stock markets combined, exceeded the capacity of the system. And we got a circuit breaker. I mean, it broke. And the question basically is that the way we want it to happen? And the answer is no, we do not, because that, as you point out, creates increasing uncertainties, and the uncertainties themselves tend to drive prices still lower. As I say in my testimony, my impression basically is that a substantial part of the decline in that October crash resulted from systemic problems in the structure of demand and supply. And one of the things that are, as Chairman Ruda pointed out earlier, that we are endeavoring to enhance is the capacity of the system to take on surges in orders, but where it cannot, then it is far better for a programmed pause, a programmed break. Circuit breakers are not good. They do not work effectively in markets. They're not something which we would otherwise like to do. They are, however, something that we prefer to an arbitrary circuit break, which occurs without control.
If I could come back to that, Mr. Chairman, I think the point that Dr. Graham made about what happened in the bond market is a very revealing point, because here we were all looking at stocks. Bond prices were skyrocketing. There were foreign markets developed for bonds, and we saw an 8-fold increase in that market when that circuit breaker went into effect. But I want to come back to the just technical overloading of the market due to computer trading. I get the idea in listening to some people that there are people who believe that we could prevent prices from going down if we could ban computer trading. And I guess in my more flippant moments that I'm obviously not going to engage in here today, I have suggested, well, maybe we might want to ban the telephone. That if information is the problem, we could eliminate the calculator and the ballpoint pen. I guess what I'm saying is that the use of the computer is clearly something that is going to be present in markets, and unless we can learn to deal with the mammoth movement of information and execution orders and develop our system to make that workable, then ultimately somebody else is going to do that somewhere else in the world, and those markets are going to move there. Is that I know I've run out of time, but I'd like to ask each of the three to sort of respond to that.
Well, Senator, let's remember where all of this type of derivative product trading comes from. It comes essentially from the fact that pension funds, our pension funds, have determined that they have great advantages in their ability to manage those funds by having access to these various different types of computer-related products. It is their demand, not the notions of people on the Chicago Mercantile Exchange or others, which created this market. The day they decide that none of that is of any use is the day the whole system disappears. But so long as they continue to believe, as they do today, that this is a very important advantage to managing our pension funds, which are so important to our economy, then we will continue to have this form of trading. And if the markets are not supplied in the United States, they will be supplied elsewhere.
I just expressed my agreement with what Mr. Greenspan has said. In fact, you are hearing, I think, strong agreement between all of us here that the problem is to deal with these markets as a whole. The problem is not to attempt the markets, to keep the markets from going up or down. The problem is to avoid the kind of volatility in the markets which will cause panic and uncertainty, something that we don't want. So our job is to balance the question of how much cost we should put into a market which we would like to operate as well as it can in order to avoid having the kind of volatility we are worried about. And I do agree that although there is not currently a derivative products market overseas, that kind of market will develop in which an index will be traded on the probably on some combination of New York Stock Exchange stocks. Whether it will be in Japan or London, I'm not sure, but I am sure that will take place.
I have nothing to add. I thought Chairman Greenspan did an excellent job with that answer.
I want to ask each of you, well, I want to ask Chairman Greenspan and Chairman Reuter. I think Chairman Graham is clear on this. But I want to ask you two gentlemen again about the fact that when you came up and testified on February 3rd on the Brady report, I asked for legislative recommendations if you had any. And I said to you, Chairman Greenspan, further, since all three agencies are independent regulatory agencies, we want to receive your recommendations directly without being altered by the executive branch. Would you comply with that request? Chairman Greenspan, you said, yes, certainly, Mr. Chairman. We would, of course, want to see and examine in detail the forthcoming SEC evaluation, which is rather elaborate and could conceivably give us insight above that which we already have, but we will comply by March 4th. We slipped that date. This is now more than 3 weeks since then, and now the indication is we're not going to get anything until May if we get anything then. Now, then, with respect to you, Mr. Reuter, I said I asked that you make this report without consultation with the executive branch. Would you do that? And you responded, we will make that report to you, sir, and it would not be normal for us to consult with the executive branch before providing legislative recommendations to you. And then the reason you're off the hook, Chairman Graham, is because Chairman Heinemann, your predecessor, replied by saying, we have no legislative recommendations, we don't think there should be legislation, which is fine. If all three of you said that, then we'd understand that. But that's not what we got from Mr. Reuter and Mr. Greenspan. So, and you, I take it, say the same thing, that you're not recommending legislation. And I have no objection to that at all. It's a free country, and that's an exercise of your free speech and your decision. But you see the dilemma that places the committee in. We asked for legislative recommendations without consulting with the administration, And in spite of that, nevertheless, rather than provide the SEC's independent assessment of legislative needs to the committee, you're now taking part in the President's working group on financial markets, which won't report to us until May, if then. Won't have a report ready until May. They might report in June or July. How do you reconcile that with your commitment to the committee, Mr. Reuter?
Senator Proxmire, as you know, I firmly believe that the Securities and Exchange Commission is an independent regulatory agency. That means that it can operate independently of the White House and independently of Congress. As you know, I did indicate in my testimony that we would provide legislation to you. I had a phone call from the White House asking about the formation of this working group. I indicated that I thought it was very important that we have cooperation between the three agencies, and I thought that perhaps a more formalized means of getting our comments together and pushing cooperation would be very beneficial to the process.
And we said that at the time, on February 3rd. My first point was that the three ought to get together. But I did not want you to get together at the direction of the White House, not that we wouldn't want their opinion, but we wouldn't want it filtered through them for them to come up with a report.
I found myself in a very difficult position between, if you will, between the White House and Congress. And you may remember, well, you may not know this, but it was at my insistence that Senator Baker called you to inform you of the formation of this working group, and I said that I have an obligation to the Senate, and I want to have you clear it with them. And subsequently, I spoke to you individually, and I thought it was my understanding that the system that we had worked out was satisfactory to you. Indeed, I wrote to you on March 17th, confirming our telephone conversations of March 16th, indicating that I thought it would be premature at the present time to specify particular legislative initiatives. I did promise that I would include in my testimony today those legislative initiatives that I thought might be useful without specifying them in detail, and I have done so. There is a section in my testimony for today which specifies legislation.
But it's not definitive, it's not very specific, as you say, it's very general.
That's right.
No. Chairman Greenspan?
Well, I can almost repeat exactly what Chairman Reuter has said with respect to the sequence of events, that obviously when the notion of an executive order surfaced, I indicated to the White House that I had the same problem that Chairman Reuter did, and that, as you know, we had that same conversation, and with a follow-up letter from me with respect to that issue. I must say to you, Senator, that had the executive order not been put in place, I would have recommended that there be some organization of the three of us or any other groupings which would in fact do precisely what we are doing at this moment. Because I think one thing that struck me about this whole episode is the necessity to differentiate the causes of the decline that occurred in October between the economic factors, the broad fundamental forces which drive stock market values, and those structural problems with respect to the market as such. There's not much we can do in this committee on the economic problems, and if there is another major problem in the stock market, it almost surely is going to result from economic, not from a review of the systemic factors which we're looking at now. Had I believed that, I would have recommended many more forceful things be done very quickly. But having reviewed the structure of the market and what has happened, while I do think there are changes required, I am not of the opinion that they are of such immediate moment that they need be addressed very quickly and hopefully in a very deliberative manner. This is not to say that I think that these markets out there are not at risk. They're always at risk. but I do believe that the risks are economic when we view them, and we should view that from one side, and that's the issues which we discuss in a different venue. But when we're looking at strictly the risks and the problems associated with markets from a structural problem, I think, from a set of structural problems, I think that we have to be very deliberative to make certain that we are addressing the real problems. And therefore, the only thing that I think is different at the moment is whether or not there is a voluntary, a legislative, or an executive order grouping doing precisely what we are doing, which I think is the right thing.
I'm going to have to interrupt for the moment because we're going to take about 2 minutes to go off the pending business. If you'll permit us, we have a quorum. That's not a common occurrence, but it's because we have such stars testifying before us. We have a quorum. We would like to act on pending nominations. It'll just take us a minute, and I apologize. The committee has scheduled a hearing on the regulator's recommendations for legislation dealing with the stock market crash of October 19th and so forth. If at any point during the course of that hearing a quorum is present, and it is present, it is the intention of the chairman to suspend temporarily in order to vote on the following nominations currently pending before the committee. David L. Chatfield of Alaska to be a member of the National Credit Union Administration Board. Kenneth J. Byrne of Virginia to be an Assistant Secretary of Housing and Urban Development. And Jesse D. Winzenreid of Wyoming to be a Director of the Securities Investor Protection Corporation. If there's not objection, we'll consider these nominations in block. All in favor of the nomination, or any discussion of the nominations? The motion has been heard to approve the nominations. All in favor signify by saying aye. Aye. Opposed, no. The nominations are unanimously approved. Now, my time's up, and
Chairman, could I just make a...
Of course, and I just about to yield to you. You bet.
Just make a brief comment of why so many of us have not been here to hear such a distinguished panel. Those of us who just walked in have been negotiating all morning with the House on the trade bill, our sections of the trade bill. The chairman was there with us earlier, but came back to chair the hearing. The House members are waiting for us to return. I speak for all of us, your distinguished panel. We're sorry we couldn't be here to hear your testimony, but we've got to go back and fight with the House.
Mr. Chairman, if I might just add to what Senator Garin said, I think this morning was very, very constructive. We are sorry we couldn't be here with the three distinguished witnesses, but I think the Senate and the House have reached a very significant milestone at this point in the conference on the agreement on sanctions with respect to Toshiba. And what's significant to me about the agreement that we reached with the Foreign Relations Committee is that we have gotten strong legislation, and most importantly, the House agreed to actually expand the sanctions against the Toshiba Corporation from 1 to 3 years, expanded the U.S. the procurement ban just from the Department of Defense to the U.S. government with some appropriate and narrow exemptions. And I think because of that, we have maintained the principle of corporate responsibility by holding the corporate parent accountable for either being willfully blind or negligent or grossly unwilling to police its subsidiaries. And that is a most important principle that has been not just retained but strengthened in this legislation.
Chairman, if I could just add, I didn't intend to bring up the subject, but there will be people who will wonder, I suppose, of the original amendment that I offered in the Senate. The changes that were made were that all of the sanctions on the knowing violator have not been changed from the original Garin amendment in the Senate, on retroactive on the parent Toshiba company, and in prospective sanctions. The parent company will have sanctions imposed on all U.S. government contracting for a period of 3 years. So although this full range of sanctions will not be applied retroactively to a parent company or prospectively, U.S. government contracting will be prohibited. And I think that it was absolutely necessary to send a signal of that kind to the business people of the world that they will not trade with the Soviet Union, they will not damage the security of this country and get away with it. And I'm sorry the administration does not agree with that impression, but they're going to have to swallow it or veto it. Thank you, Mr. Chairman.
Thank you. I'm going to have to leave myself. I'm supposed to chair that conference, and I broke it up to come here. So I'm going to ask Senator Regal to proceed with the hearing.
Thank you, Mr. Chairman. Now, you were the last one to question, so I think the rotation goes back on that side. Do either of my colleagues here want
Well, I'm going back to the conference, so you're on your own.
Thank you, Mr. Chairman. I was going to comment before our distinguished chairman had to leave that I, too, have agreed to support his Intermarket Coordination Act, but I had one point that I wanted to raise with our distinguished panelists. It seems to me that the Secretary of the Treasury would be an important member of that coordinating council and perhaps could make it easier to coordinate among equals if he were the most equal and had the powers of the chairmanship. I would ask first if any of you would have problems with that kind of coordination system in which the Secretary of the Treasury or his designee were added to the council.
I have no problems with adding Secretary of Treasury to a working group or a discussion group. I have absolutely strong views about having a group with decision-making power in which any group is able to put its to say that the agencies must pursue whatever that group says. And if the Secretary of Treasury were added to a group, I think that would be a change in the system of regulation in the United States, which clearly ought not to be done in an ad hoc basis of that kind. If Congress wishes to reorganize the regulatory system over the exchanges and the monetary system, it certainly ought not to do so by inventing a coordinating group with some sort of power to direct us to do things. The system is much too delicate to permit of that kind of structure.
But if I may, it's more than a coordinating group. It is a super agency. And I would just point out that I vehemently oppose that notion of creating a super agency. But I'd point out just as a practical matter that if you had 4 voting members, at least their 2 members could probably talk to each other. The way it's structured now, and though even with 4 members I think it would still be a disaster of a bill, but the way it's structured now, if Chairman Reuter and I were to agree on something that ought to be done in our individual markets and then proceeded to undertake, say, some rulemaking on the basis of that, CFTC doing rulemaking on the future side and the SEC doing rulemaking on the security side, that it is not at all clear that that would be legal under the new structure. That is, I don't believe that we could independently coordinate among ourselves if it could lead to rulemaking decisions, which is why independent agencies have 5 members as opposed to 3.
I think we must be reading off of different bills, but let me ask Chairman Greenspan for his comments. It seems like it's an exciting area to try.
I think there is an ambiguity in the bill that's written now which would enable, for example, and this is hopefully a highly hypothetical example, that this 3-chairman committee would vote 2-to-1 for, say, raising stock market margins, which is the bailiwick of the Federal Reserve, and I would be against that, let us assume, and so would every other member of the Federal Reserve Board. Now that raises a very interesting legal question as to whether or not the committee overrides the Federal Reserve Board on an issue which the Congress previously had insisted the Federal Reserve have control over. And the reason that you run into this problem is, as I mentioned in my prepared testimony, is that you have got essentially conflicting priorities in the system, and that you either have to restructure the whole decision-making regulatory mechanism or remove the type of ambiguity which I just alluded to.
I don't, if I may say, I don't read anything in the powers as giving this council the power to override the responsibilities of any single agency. I believe that Mr. Brady pointed out, I believe that others have stated that there is a tremendous need for coordination in planning, bringing the group together to plan, not taking the powers away, and I would agree. If I thought this bill we're going to give a majority vote to override, in that committee to override the regulatory decisions of any one of your agencies, then I would not be for it. But we are going to have a mechanism where your agencies come together and develop a plan which can be effective in case another October 19th starts to happen before the thing spins out of control. And we're going to have some one voice who can go to the other markets in the world and say, we have taken steps. We want you to take steps. We are here to negotiate with you and develop a harmony in international market regulations. This is not, in my view, in any way supplanting the powers or the responsibilities of any agency, but I see it as a necessity. And I don't think that any one of you sitting at that table is going to be in nearly as good a position to head that coordinating council as the Secretary of the Treasury would be. I'd be if one of you wants to volunteer and say that you would be better. Mr. Reuter, you've mentioned the SEC should be in the lead. I'd be happy to hear you say why you'd be better than the Secretary of the Treasury.
Well, first of all, I would repeat again, I think it's wrong to establish a group which has decision-making power over these agencies.
I don't think we said that.
Well, I will read to you. It says that there shall be a vote, and then it shall say that you may enter into contracts, execute instruments, do any and all acts as may be necessary incidental to the conduct of its business. I read this legislation as drafted as giving great power to the...
I think the contracts you can execute are the contracts to buy furniture.
Well,
Senator Bond?
let me just... I do think that it would be wrong to rush into the establishment of such a council with any decision-making power in a circumstance in which we are still in the negotiating situation and attempting to work out things in a clear and coordinated manner. I have made a legislative suggestion for what really is a very limited amount of authority going to the Securities and Exchange Commission to deal with the very few contracts that are involved with the derivative indexes, but not to have power over the Fed or over the major part of the CFTC's work.
Senator Bond, I do think that it was worthwhile maybe getting other opinions, but it is the opinion of our lawyers, and when I read it as well, that there is rulemaking action here, and that, for example, this committee must vote and must also respond or have, will be under the other acts, the Sunshine Act, Administrative Procedures Act, etc. But I do believe that if you look at this carefully, and maybe we should refer it to a legal counsel, but I believe that they would agree that there is a real confusion here about those particular authorities.
Mr. Chairman?
Just to follow through on this, I agree with the witnesses that I think if we would include the Secretary of the Treasury, that we cross a key dividing line here. You are independent agencies, all three of you, designed that way, should remain that way. We've got all kinds of mechanisms in place to maintain the insulation, and I think well, it's tempting from a functional point of view to think about bringing in the Secretary of the Treasury. I think it really, that brings with it other problems that are really quite profound, so I would disagree with that idea. But Chairman Greenspan, I'm struck by what you said, and that is that I've been uneasy about thinking exactly how this mechanism would work myself in terms of decision-making and votes. And on one level, I'd thought if there were, say, a disagreement between the SEC and the CFTC, you're the third vote on the panel, and presumably you become the tie-breaking vote. I don't know how appetizing that sounds to you as an assignment. But you pose a different situation, and that is what happens if the CFTC and the SEC are in agreement and you're the odd man out, and it has to do with a function, i.e. margin setting, where that cross-connects to certain established responsibilities of the Federal Reserve Board that you presently have, and so you have an inherent potential for a conflict there. And that concerns me. That, to me, is a real problem. And I don't think that's been illuminated fully yet and discussed, but I'd like you to elaborate a little bit more on that, if you would, right now.
Yeah. May I just present this? Sure. The Section 5 of the bill has a phrase which says, such bodies, referring to the commissions, are directed to implement the actions so determined by the committee. If the committee determines that these bodies lack the necessary legal authority to implement the decisions of the committee shall report that determination to the Congress together with its legislative recommendations designed to accomplish the purpose of this act. Now, I read that, and I'm not sure that it is essentially to mean what it says, but it creates, in effect, an agency which overrides the commissions. And in so doing, it invalidates majority votes on the parts of the commissions to do X if, in fact, the super agency decides to do non-X. And while certainly one can construct a system of regulation which has, say, the three of us at the top of it, the logical implication is to then fully restructure everything under that committee. The alternative is, I think, what we're doing now, which I think is really quite effective, namely, it's a voluntary agreement or voluntary set of discussions with no mandatory requirements. It really is an issue of the Congress or the President or somebody else directing us to find agreements amongst ourselves, and we take that request seriously, whether it comes from the Congress or from the President or a combination of both, and I think we shall. But the alternative strikes me as really such an extraordinary alteration of the regulatory structure that it raises vast numbers of potential problems that I haven't even given 2 seconds thought to, but are certain that more than 2 seconds is required.
Senator,
Yes.
excuse me, Senator Regal, you can't give authority to a new agency without taking it away from the authority, or taking away that authority from whichever agency that already has it. I think that's, unless you're going to have just blurred lines of jurisdiction. That is the concern. And what we would have here as a result of this new bill is an agency made up of 3 individuals with the expertise of their agencies in 3 different places, but each being able to make up 1/2 of a majority to make a decision about an agency over which they do not have the expertise. I might add, though, as just parenthetically, that with increased communication and coordination, we all have gotten much more expertise in the other agency's business, but you're fundamentally changing the structure. If you look at an independent regulatory agency like, say, the SEC or the CFTC or the Board of Governors, each commissioner is an expert on that particular agency's business.
Let me just ask one yes or no question, then yield to Senator Graham, and that is, were you consulted on this legislative package?
No, sir.
Were you, Secretary
No, sir.
Ruder?
No.
So your chance to react to it in terms of your support, reservations, whatever, really is occurring today in this setting. Thank you. Senator Graham?
Thank you. Thank you, Mr. Chairman. I'd like to pursue the line of questions that you and Senator Bond have for a little further, and then ask a question on a different subject. As close to a yes or no as you feel comfortable with to this first question. In our previous hearings on the autopsy of October the 19th, many people have felt that increased global cooperation and coordination was going to be a significant factor in ameliorating the circumstances that might lead to a repetition. What weight do you put on the international dimensions of market cooperation?
I would put some, but I would not want to overemphasize.
On a scale of 0 to 10.
Today I would put 3. 5 years from now I'd put 8.
Mr. Ruder?
I would agree with that assessment, but I would add that I do not think that the foreign markets are going to solve our problems. I think they may indeed exacerbate them.
Ms. Graham?
I think the international cooperation is important.
On a scale of 0 to 10, today and 5 years from now, what number would you put?
The CFTC is looking to the future. And I would, even before the October break, I would have put it more on the 5 to 8 scale, regardless of the October period.
Your question did not deal with whether we were wanting to cooperate. That's a 10 for me, but the question was effects.
Well, the question was the importance. Is this a relatively
importance, I
trivial
agree. No.
matter, or is it, a 10?
It is important.
You do have to understand that the equity markets are not as developed internationally as the futures markets are, or the monetary markets are. So my answer in that sense may differ significantly.
Would you care to put a number today and 5 years from now? We have a...
Talking equity, I'd say, if we're talking about the importance of the international equity markets to the United States right now, I'd say it's a 3. Mm-hmm. But in 5 years, I think 8, and that's more than doubling of importance in 5 years.
I was referring to the equity markets.
Yeah. Number 2, with that assessment of today's and 5 years from now importance, do you believe that the United States, with its current organizational structure, that is, the specific independent, functionally based regulatory agencies, can effectively participate in efforts at enhanced international cooperation and coordination?
Yes.
Mr. Ruder?
Yes.
Yes.
Okay. That.
Thank you, Senator Graham.
No, excuse me. That was my first round of questions. Mr. Chairman, I might say it might be interesting, in light of this legislation, to look at our previous hearings and identify those persons who I think would have answered the second question differently, and possibly have a follow-up, because the level of importance that I attach to the legislation that we've been discussing is highly influenced by the level of significance we attach to international cooperation and coordination, and the degree to which you believe that is possible with what previous panelists have testified as being an uneven, diffused, fragmented voice. I might parenthetically say that one of the reasons given for the effective coordination among central bankers is the fact that within that area that we do have a single voice, and that there has been a an increasing history of cooperation in that dimension, but that has not been true in equity and commodity markets. I do not have the capacity to evaluate the truth of that representation, but that is a representation that has been made.
Sir, that's right. The banking community has been much more of one in its analysis of what's happening. The securities markets are far behind in that regard. My recent trip to Britain led me far along the way towards my understanding of that, and I can confirm that.
But that doesn't mean there has been no coordination ongoing at staff levels, et cetera, all these years.
Thank you, Mr. Chairman.
Thank you, Senator Graham. Following up on the line of questioning I was pursuing before in terms of the degree to which you had been advised or questioned beforehand in terms of drafting this legislation, certainly there's no requirement that you be. The chairman is free to draft a bill and often does and put it in and with co-sponsors, and so that is entirely appropriate. But just speaking for myself, I think on a matter of this complexity in terms of all of the cross connections, and particularly in terms of existing authorities, how existing authorities that each of you may have may be impacted by aggregate decision making of a three-person body, I think raises a host of issues that need careful thought and need pretty careful examination. I think the issue of the Fed chairman being the odd man out on an occasion where if we had this body and the three of you were to have split in thinking and the SEC and the CFTC were together in opposition to the Fed, the legislation as drafted does not, in my view, sufficiently address that question. And so I want to think that question through better in my own mind. I am told by some of the market participants that the self-regulatory organizations are really not moving fast enough in talking with one another and trying to resolve what can be resolved short of some kind of an administrative push by the administrative agencies. When I hear that, I take it to be real. Now, are you hearing that as well or not? Either of you.
Could I respond to that? I met this week with Mr. Phelan, the chairman of the New York Stock Exchange, and discussed with him the importance of cooperation with the commodities markets directly, and emphasized my belief that the appropriate way for these remedies to take place is for the markets themselves to reach agreement. I said that to him privately, and I'm willing to say it publicly, that I think that the first level of cooperation has to be at the market level. And I know that he is in contact with Mr. Malamed of the Mercantile Exchange, and I'm hoping that the two of them and the options markets and the other stock exchanges can reach agreements among themselves, which will be self-interested, market-oriented agreements designed to prevent another October 19th.
But it sounds, well, implicit in what you say, and it dovetails with what I'm hearing, and that is that they still have some distance to go, that they have not been able to, in effect, move through those discussions and reach judgments and reach some sort of set of final understandings.
That's right, but you should be aware that the Mercantile Exchange has taken two steps which I think are useful. One is to, just this week, they've put in a price limit of 15 points, which translates to 120 points on the Dow Jones, which means that their market will shut at that point. They have raised their margin levels to $18,000 per contract, which is a margin level at 13%, which is a positive step. The New York Stock Exchange has independently put in its 50-point dot limitation, a matter which I can't discuss, but which is going on there. And I think the next step is that these market participants move carefully to discuss coordinated market closing.
How often are they meeting?
They are,
They're
they
meeting
are...
every day, they're
No,
meeting
no.
every week, I mean...
But there are discussions that go on at the staff level as well as at
Every
the
day?
principal's level. I don't know if it's every day.
No.
But
Well, why
probably
shouldn't
not.
it be every day? I mean, if this is something that needs to be done, and it's going to be done at the self-regulatory level, then why shouldn't people sit down together for as long as it takes and get it done?
I think there's not only coordination among themselves, but also with their own members that have to go. I also would add that the Chicago Mercantile Exchange has put in opening price limits as well, the opening period.
Have either of you received any static coming back from any of the market participants that things are moving slower than maybe they should?
I have not.
Well,
Surprising, I would hear it and you folks wouldn't.
well, I'm not saying I haven't heard it. There has been significant concern in the equity markets over the effect of the futures markets on the stock exchanges. I happen to think that that concern translates differently than it will translate once there's full understanding of the way these two markets work.
Right.
And I should emphasize, Senator, that I think among the three of us, there is a substantial agreement, as Chairman Greenspan indicated earlier, of the value of the derivative products as a hedging device for large portfolio managers. And we don't want to destroy that in the process of attempting to decrease volatility.
Ms. Graham, you were going
I
to
was just going to point out that I had indicated some concern over uncoordinated circuit breakers, but in terms of whether or not that process of the exchanges getting together and discussing whether or not that process was moving along fast enough, I have not been aware of concerns over that. I do know that they have been meeting. We had hosted a meeting recently.
Let me ask you both to take a reading on that problem, if you would. I'd like you to talk to the respective participants that you work with and see what issues are left unresolved at the self-regulatory level, cross-market issues. And let's see if there are unresolved issues, if they can be resolved. Seems to me the clock is running. I understand the frustration of the chairman. He's asked for recommendations, legislative recommendations. They have not been forthcoming. The administration seems to be taking a terribly long time to decide what it wants to do, if anything. And I think that is a frustration to the chairman. I don't purport to speak for him, but that's my observation. And so I think clearly the feeling has been that there needs to be some kind of a push to try to move things along at a faster rate. Now, granted, these are very complex subjects, and sometimes you can go faster than you should. But weeks and months have passed here, and it seems to me that the unresolved issues ought to be resolved. You know, it seems to me that it's not sufficient to come in and sort of talk around things and say, well, we've got issues that we haven't really been able to settle yet at one level or another, and we're working on them, and that's the best we can do. It seems to me that, you know, we've gotten enough signals from the President's Commission to move with dispatch here that seems to me these issues ought to be hammered out.
Well, I may say, Senator, that one of my missions this week was to communicate to the self-regulatory organizations the sense of time urgency that I feel, and I think the Senate feels, and I think the President feels, by establishing our working group with a fixed time limitation on it.
Well, we thank you for your testimony today. There may be other questions that will be submitted for the record. Thank you.